OPEC has a big problem. And with some breaking news that came out this morning, it sounds like it's going to be our problem too. Hey, I'm Aaron with the Oil Balance. With 30 years of experience in oil trading and analytics, I'm here to elevate your understanding of the oil markets. Like I said, we just had breaking news this morning. The Saudis say they're okay with lower prices. So I shot this video a couple days ago talking about the big problem that OPEC has, that they've been taking 2.2 million barrels per day off the market for the better part of the past 2 years. Most of that's been Saudi Arabia, and I'll go through that and explain that to you further in the video. But they've been going above and beyond. The Saudis have been going above and beyond, cutting even more than what they had agreed on with their other OPEC member countries. And now they say they're okay with lower prices. How are they going to be able to bring this production back to market and not completely crash the market? Well, today, after this surprise announcement from Saudi Arabia, WTI prices are down over $2. We're just above $58 per barrel as of the time of this shooting. As of the time of this video, we're down about $2 per barrel. So the market is getting pretty worried. And again, I'll go over this a little bit more in the video, but below $60 with a $50 handle, that's telling US shale to stop producing, to actually reduce production. The numbers that came out this morning were at about 13.45 million barrels per day in the US, up about 360,000 barrels per day versus year ago. Is that going to come crashing down? We'll see, and we'll get into in detail the OPEC problem. All right, this video is not meant to be a history per se of OPEC, but I do want to start out with some context just so you sort of understand where they're coming from and what sort of mindset they might be in. So OPEC was created in September of 1960 by the 5 key members. You had Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela. Sometimes people forget about Venezuela there. And then by 1965, they moved out of Geneva to go to Vienna, which is where they're still an OPEC building in Vienna. And they still meet there. A lot of the recent meetings have been video conference type things, but it seems like the big senior ministers do like to meet in Vienna every once in a while anyway. So let's go through some of the stated objectives. And these are right from their website. Just copied sort of verbatim right from their website. So just to read through these for those of you who might not be able to see this, their main stated objective is OPEC's objective is to coordinate and unify petroleum policies among member countries in order to secure fair and stable prices for petroleum producers, an efficient economic and regular supply of petroleum to consuming nations, and a fair return on capital to those investing in the industry. Now, in 1968, they had some more meetings. They had this statement that they put out sort of in addition to the previously stated objectives from 1960. And that is, OPEC adopted a declaratory statement of petroleum policies in member countries in 1968, which emphasized the inalienable rights of all countries to exercise permanent sovereignty over their natural resources in the interest of their national development. And I highlighted some of those key terms there because I think they come back. They have a lot of meaning in this story. So to kind of, again, get back to the origins, we're not going to go blow by blow through everything OPEC's ever done. But again, I just want you to sort of think, let's start in, let's say, World War II. And that war was primarily fought on the back of oil, right? Because now you had airplanes, you had all sorts of tanks and different infantry, trucks and whatnot that would move infantry around much more than you had in World War I. And you had a much broader theater of war to cover also than you had in World War I. So all of a sudden, your supply chains had to include oil. And how do you do that, especially if, from a US perspective, if you're trying to go over to Europe, how do you plug into these different supply chains of oil? So it very quickly became a war of logistics on who can control the oil fields, who can control the refineries, and that sort of thing. And so that really started changing people's mentality after the war. And we can see that evidenced in a lot of the decisions in the US after World War II, especially that Eisenhower made, seeing these things sort of firsthand as a general in the European theater, that he made a couple of big changes. He instituted the U.S. highway system. He instituted the breakdown of different regions of the United States in what we call PADs today, Petroleum Area Defense Districts. So you can sort of break apart the U.S. into chunks and say, well, we've got this much oil, gasoline, jet fuel, diesel fuel in this section of the country. We've got this much over here, et cetera, et cetera. So people whose job it is to plan the safety of our country, to sort of game out what would happen if so-and-so invaded our country. How would we move goods and services and military around to defend those positions? A lot of that comes back to what Eisenhower did right after the war in terms of developing a highway system so you can get goods and troops and whatnot to wherever they need to go. And you could get supply chains to wherever they need to go to support those troops in those actions. So in terms of sort of pushing petroleum to the very front of thought in a lot of these different countries, World War II went a really long way to sort of do that. So who was actually finding the oil, though? So you have to, again, think back. You had John D. Rockefeller, Standard Oil, and that was broken up as a monopoly. And so then you had all these smaller bits. You also had other countries around the world. Of course, British Petroleum should be pretty high on the list of major oil companies, sort of, let's call it before World War II, that were out looking for oil in exotic places like Saudi Arabia, Kuwait, Iraq, Iran, etc. So a lot of these countries that ultimately ended up becoming the founding nations of OPEC were being explored by oil companies from different countries, which, again, how would, if you're not in the petroleum finding business, you should probably go talk to people who are really good at it if you think there's oil in your land. And so that's what they did, and they brought them in. But then you could sort of see a natural progression over time that you probably wanted to nationalize that to the extent possible, to the extent that your constitution was set up to allow for things like that to happen. So I think that's why they came up with these specific declarations that they made, that OPEC would sort of seek to develop a way to protect their natural resources for the betterment of their people or for their nation. And why I think that's important, why I keep bringing that up, is because there's a lot of conversations just a few years ago, sort of before COVID, notably before COVID, where people were talking about peak oil. And they've been talking about peak oil for a long time, for decades and decades now, right? But you could see in the conversations that the Saudis were having, sort of publicly airing concerns out there, where they were talking about how do they monetize that natural resource under the sand, under their feet in Saudi Arabia in such a way that they can support their population, so that they can sort of support the infrastructure needed for their citizenry just to keep their nation running without crushing the market, right? There has to be a balance. So yes, you can use the income from the natural resource that you have that you're selling on the international market for the betterment of your people. But if you bring too much out at one time, you're going to crush the market, and then you're going to have a harder time to do that. So Saudis in particular were struggling with the question, and they were sort of rhetorically asking this question in very public ways. How do they monetize the natural resource under their feet to support their society? What's the best way to go about doing that? Especially in terms of peak oil, do you go ahead and bring as much oil out now and try to get a return for just a few years before the asset goes to zero? Again, thinking that we'd all be going to something else by now, renewable fuels or solar, whatever, anything other than petroleum. Or do you sort of play the long game and you try to manage price in the oil markets? And that's the second is more what they've tried to do over these past few years. Now, and that's what's gotten them in trouble. And we're going to sort of get into that. But let me take one more quick little detour and tell you a little story. Back in 2004, 2005, something like that, when I was in New York City, I had a meeting. It wasn't just me, it was a group of people meeting with the former ambassador to the UN from Venezuela. And he was very upset with Hugo Chavez, the president of Venezuela, because around that time, Chavez decided that all of the oil, the revenue from all the oil that Venezuela was able to sell, was going to support all of the, not just the infrastructure of the country, but just sort of completely take care of all the people in a very communist sort of way or socialist sort of way, that any problem that any citizen had could be solved by petrodollars. And the man who was the ambassador to the UN from Venezuela had a big problem with that, was with nationalizing. Of course, PDVSA has always been a nationalized company, but to turn all those dollars into supporting sort of every facet of domestic concerns of your people was probably going overboard, and seems like he did go overboard, and things are quite tough in Venezuela now. So those are sort of two extremes I would maybe throw out there as what these countries are dealing with, especially when so much of their country's revenue is dependent on just that one exchange of goods, right? Whether it's crude oil, natural gas, or sometimes the refined products, you really have to be able to manage that quite well when that is sort of your main revenue source for your country. So again, if you sort of think of it from that point of view, which is maybe a lot different than how we typically think of things in the US, maybe it helps you to sort of get in their shoes a little bit and see why they're making the decisions that OPEC has made. So if you do want more history, there's a fantastic book written quite a while ago, back in the 90s, the early 90s, by Daniel Yergin, called The Prize. I just pulled this up. This is directly from Amazon. I think it's $13 or $14 right now as of this recording, so it's not super expensive. But this book is absolutely fascinating. If you are in the oil industry, like you're relatively new to the oil industry or something, I would absolutely 100% recommend that you buy this book and read it. It's a fascinating look. It's sort of the history of the world through oil, if you will. But it gives you so much context to what's going on now that I find it very useful. So I thought I'd throw that out there really quick, especially as this particular video is not meant to be a history of OPEC, but more where are they now and how do they get out of this conundrum that they put themselves in. So at any rate, let's look at sort of the current or recent makeup of OPEC. So these orange bars, if you can see that on your screen, are core OPEC. These fainter orange bars are the OPEC Plus, or the DOC, as OPEC calls them, the sort of friends of OPEC, if you will. But if you go through this, you'll notice a couple things. Saudi, in terms of everyone except for Russia, is just a major player in, they kind of blow away everyone else, right, in terms of their production. And so they have a lot to say of what goes on within OPEC. So they usually don't try, at least recently. I have to be sort of careful of how I say this. They don't try to push their weight around too much. In it sounds like in terms of the meetings, or from what we can see, um, a lot of their meetings are actually televised or broadcast. So that gives you some insight into how the relations are going. And if the meeting is not, they usually have a press conference afterwards. It is sort of televised. So again, you can sort of get an idea of who's mad and who's happy and all that kind of fun stuff. But um, so obviously Saudi Arabia has sort of the most to gain or the most to lose, and that's the way they've been managing the situation since the COVID lockdowns, when demand just absolutely tumbled in 2020, started to make a bit of a turnaround in 21. And then you had the whole Russia Ukraine thing, which blew oil prices sky high, and a lot of other things too. A lot of other prices went way up on that invasion too. So how does Saudi manage that? They actually took a lot more barrels off the market than they needed to in terms of the deals they struck with the other OPEC members. So you can see from maybe a cheating perspective, and again, and I keep saying this on other videos, that's usually the way that these OPEC deals break down. Whenever they meet and they decide we need to take barrels off the market to stabilize the market, it works for a while until you start to get people cheating. Typically, unfortunately, it's when demand is actually picking up and everyone starts to see demand is picking up and gets excited and wants their piece of the pie, so to speak. And so everyone in OPEC starts bringing their production back. But that's not what we're seeing happen right now, right? Demand, and we'll get to this more in a minute, but demand has kind of been sideways, at least for the transportation fuel here for the last couple years. So there's not a lot of the pie hasn't changed too much. And so for some of these countries to be producing more than they should be makes it very difficult for everyone else. And so that's part of what the discussions have been between OPEC and DOC, or OPEC Plus, if you will, countries. How are we going to manage this? How are we going to get through this? So take someone like Kazakhstan, for example, who this week, the last week of April, second to last week in April of 2024, basically telling the world they're going to have a hard time reducing production to the levels they need to be at. They've got some new fields coming online. They've got 50-50 joint venture with Chevron on a new field coming online. And it's very difficult for them to say, well, I'm supposing this is part of the reason. It's difficult for them to say to Chevron, who owns 50% of this, we have to throttle this back. We can't let this go on because we've been overproducing, and you've spent all this money and time and effort in trying to get this oil to market, and now we're just not going to do it because the rest of OPEC says so. So you can sort of understand, again, where the frustration comes in on sort of several levels and from several different directions here. So again, by Kazakhstan making these sorts of statements, will that cause the rest of the OPEC deal to crumble? Maybe. They're not a core OPEC member. They're just part of the OPEC Plus section for now. So can they weather through that part? Maybe. But as we go on through this presentation, you'll start to see, why that's particularly dangerous this time around. So if we look at a couple things, OPEC has their own in-house team of analysts, and they're really good. And they have all sorts of insights that the rest of us in the West at least don't get, because OPEC sells oil into so many places and they can get really good feedback on that sort of thing, and they can all sort of meet together. So if you can imagine, some of the super majors in the US, they have really good intelligence because they're selling oil all over the world. Or someone like Vital or Trafigura, they're selling oil all over the world. They get all this great feedback from all these different places in the world, and they get a really good sort of contextualized view of what's going on in the oil market around the world, and can make better informed decisions than people who are just maybe based in the US and making decisions about, what's going on in this certain shale region or whatever. So now multiply that by, 10 or 100 times in terms of OPEC, right? Because between OPEC and OPEC plus, you've got 40 million barrels of oil under control, roughly half of refinery demand across the world, all meeting in one room to talk about what's going on. I mean, that should be a lot of good information flowing around. The reason I bring that up is, if you can see on this chart here on the left, here's the demand changes over time. So for a second, we're just going to focus on the demand side of the equation. So obviously in 2019, the International Energy Agency here in the light blue, based in France, saw a pretty decent growth. STIO, which is the U.S. branch of the Energy Information Administration, so dark blue is the U.S. one here, saw pretty decent growth. OPEC had actually a drop in demand. In 2020, we all had drops in demand. OPEC had the smallest drop in demand. But then you'll see, particularly in 2021, OPEC was the most optimistic about demand coming back. Sort of a bit of a mixed bag in 2022. But then since 2023, they've really seen a lot more demand come back than what everyone else is seeing. So again, it's all about perspective, right? What information are you getting and how good is it? So this chart on the right is nothing but sort of a zoomed in section of 2023 through 2026. And what I'm trying to point out to you is the analysts that work for OPEC are absolutely telling the OPEC members that are making the decisions that demand has been very good. And hopefully you can see that from this chart, where the OPEC annual change in demand is bigger than sort of everyone else's going forward. And I think that leads a lot into their decision here recently to bring back 2.2 million barrels per day into the market over the next 2 years. And actually, if you add up these increases that they've got for 25 and 26, it equals something like 2.7 million barrels per day. So that allows some growth for some other places like the US. But if they are right, then they don't have a problem. They can bring all that production back, and the world, will be able to assimilate that. Now, there might be some ups and downs. They might be too soon or too late, that sort of thing. But sort of generally speaking, on an annual average, if their demand projections are correct, then they could bring those 2.2 million barrels per day back, plus some growth from places like the U.S. and North Sea and whatnot, where we know that production is going to be growing. The problem is, a lot of other analysts looking at this have a very hard time reconciling the demand numbers that OPEC is seeing here in the last couple of years and what they're projecting going forward. It just doesn't seem to jive with everything else we're seeing. In other words, in 2024, you can see how the IEA and the French-based international group and the US-based group are seeing increases in demand almost the same. Same thing in 2023, almost the same level. 25 forecasts are a little bit off. For the 26 forecast, the U.S. numbers are pretty strong, and the International Agency hasn't put anything out yet. But so from a sort of an information flow, this is what makes it so difficult, right? Because their internal analysts are telling them, oh yeah, there's plenty of room to grow production into this increasing demand. The other thing we need to look at too is, and this is from the French group, the International Energy Agency, if you look at sort of total liquid demand and break it down between refined product and NGLs, or sort of PetChem, right? NGLs and naphtha, there's a growing discrepancy. So let's just forget it for a minute about 2020, 21, and 22. Set those aside for a second. If you start at 2019, you see refined product demand just over 80 million barrels per day. Skip forward to 2023, it's right at 80 million barrels per day. 24, it's right at 20 million barrels per day. 25, you actually get a little bit of growth. Maybe it's hard to see on the chart here, but there is a little bit of growth year on year. If you look at the NGL plus naphtha or the PetChem side of things, this is where all the growth is happening. And I know I've said this in other videos, but I really want to hammer this home because this is where all the growth is. This is the sector we need to be watching. So if you look at the 2024 number and compare that to the 2019 number, this PetChem sector, the NGL naphtha section, that's grown by 2.6 million barrels per day versus 2019. If you look at the refined product or the transportation fuels section, that's increased by 234,000 barrels per day, so 0.23 million barrels per day. In other words, the NGLs are outpacing, the growth in NGLs is outpacing the growth in transportation fuel globally by tenfold. All right, so that's a major difference. And primarily, it's crude oil that OPEC is trying to bring back to market, especially when you look at OPEC plus. So sort of OPEC plus all the DOC countries taken together, which again is about 40 million barrels per day of oil on the international market. So again, if you look at that, 40 million barrels per day is roughly half of what the transportation demand is across the globe. Okay, so that's a huge portion that OPEC and OPEC plus control. So what's going on here? They're actually losing market share, right? So again, just looking at the crude oil side of things, at least on this chart over here, the refinery demand, we're looking at just the crude oil side of things. If you look at what OPEC production has actually been over that time period versus refinery demand, you can see it's been sort of going down. In 2022, they had a nice kick up there, but otherwise, it's been pretty much downward sloping. OPEC's share of refining demand since 2018, 2019. Meanwhile, U.S. production, which has kind of slowly been growing, and so again, U.S. production is 13.5 million barrels per day. So versus Saudis, who are producing 8.8 million barrels per day, something around there. At the moment, they've gone up to 12 for a short amount of time. So the Saudi can be sort of competitive with U.S. production rates. U.S. production is not at all competitive with all of OPEC, which is somewhere between 27 and 30 million barrels per day, depending on how much they've taken off the market and how much they can bring back. So just to put that in perspective, which is why I've taken it as a share of global refining demand. So hopefully you can see the upward trend on the U.S. share of global refining demand, just in terms of their production. On the NGL side, it gets even worse, right? So we do produce a lot of NGLs here in the U.S. A lot of these shale plays have wet gas. So kind of in the natural gas plays, when you're drilling for natural gas, you can drill for what's called dry gas, which is mostly methane. You do have a little bit of the other NGLs in there that you try to mostly strip out. So you can sell methane plus a little bit of ethane to the domestic market and have it safe for the U.S. pipeline system that's in place, and even some of the exports going to Mexico and whatnot. In between dry gas and looking for oil, there's what we call wet gas, where you're looking for pockets where it's NGL rich. And maybe it has a little crude with it, maybe it's got some natural gas with it, but you're looking for that in between. We call it Y grade, where it's sort of the combination of all the different NGLs mixed in there, and then you have to send it to another plant to get separated back out. The point is, with the shale plays we have in the U.S., we make a ton of NGLs. So you can see, again, as a share of global NGL demand, U.S. has been ramping up. Now, again, this is a forecast for 2025, so it's kind of flat to 24. But you can see from 2021 to 2024, U.S. ramped up that global share nicely. Meanwhile, OPEC, and again, this is just the core OPEC, not the OPEC plus, has been sort of grinding lower over that same time period. So they're losing market share, which is, the difficult thing. how do you bring back production in a market where demand is not growing as fast as you think it is? Right? If you bring back production, you're just gonna crash the market, right? So here's another way to look at it. Here's the year-on-year change in production, and I've given the Brent price. So again, Brent crude oil is traded in London. It's sort of the international, the big international benchmark, if you will, for crude oil. But it gives you again a sense of how things are playing out. So back here in 2019, U.S. grew a lot. OPEC actually cut, and we were, sort of in the $60 per barrel range on Brent. In 2020, of course, you had the lockdowns and everything fell. WTI went negative for a brief period of time, and both U.S. and OPEC brought production down, which was completely appropriate. In 21, the U.S. didn't really grow production at all. Still trying to catch up a bit on our heels a little bit. OPEC did grow production. But then in 22, production grew a lot. So again, remember, U.S. production or shale production is very much driven by price. So in February of 2022, Russia invaded Ukraine and prices shot up. And it doesn't matter why prices shoot up. If prices shoot up, U.S. producers are going to see that prices are up and they're going to drill because they get the return on their investment, just like OPEC was talking about at the beginning of this presentation. So U.S. production shot way up and OPEC production shot way up. Again, probably appropriate because demand was also taking off at that same time. In 2023, U.S. production was still up because prices were still high. OPEC production started coming back down again as the market was getting a little bit wonky, getting ahead of itself. Now on the supply side of things, OPEC took more barrels off the market in late 22, actually, and it really manifested itself in 23. And then in 2024, when the market was actually really quite balanced, if you look at the International Energy Agency figures, supply and demand were pretty close to the same number. U.S. production grew a little bit, and OPEC continued to take barrels off the market, again, most of that being Saudi. So again, if you drive prices high enough, you're going to get a U.S. production response. If you drive prices low enough, you'll be able to shut off that growth, as hopefully you can see from this chart here, just kind of eyeballing it. You can hopefully see that. So what's OPEC to do? Are they to drive prices down to try to stop production? Well, how are you maximizing your natural resource in the ground that you're trying to, pay for all these social and social economic projects for inside your country? So it's really a very difficult situation that they got themselves into. So one sort of solution to that question, and I think this is a good one, is Saudi Arabia, or Saudi Aramco in particular, which is the oil trading arm, is going out and investing in a bunch of different infrastructure projects, or PetChem projects in this case, around the world. So kind of growing your own demand in a sense. And I think that makes a lot of sense. I think that's very smart of the Saudis to do, especially, again, they're getting into the petchem side of things, which we saw is the part of the barrel that's actually growing in terms of demand, where everything else seems somewhat flat, at least for now. So I think that's a good long-term solution, but I still think they're going to have a very difficult time this year trying to bring that production back. So again, if we go back to the International Energy Agency numbers, in their April report, their OMR report, they actually just decreased global liquids demand to 700,000 barrels per day. U.S. production is up 350,000 barrels per day. And OPEC wants to bring back more than 1 million barrels per day this year. So again, those things don't seem to be matching up. To add on top of that, there's a whole tariff situation going on right now. Again, I'm recording this at the end of April, and we're still trying to figure out what's going to happen with the tariffs between the U.S. and China, and what sort of knock-on effects that may have to the rest of the market. So it's a very difficult situation that OPEC has themselves in. There was actually news this week where some members of OPEC want a bigger increase in production for June. So the next meeting that they have, they'll discuss what they're going to do in June. And a couple of members are already saying, "Oh, let's increase production. Let's increase production." From a timing standpoint, if you're going to bring back production, going early summer is the absolute right time to do it. And I've said this before. That's when refinery demand really starts up and whatnot. But they have to be very careful, and they might actually just end up taking some of that production right back off the market at the end of the summer. Now, that's the other interesting thing. There were comments out of OPEC saying they still look to try to stabilize oil market prices, right? They're still interested in doing that. So you have one arm of OPEC saying, let's bring new production to market or ramp up production, and the other arm saying, yeah, we're going to still be there to stabilize global prices. Those two things don't seem to go together right now. So the only way OPEC gets out of this in an easy way is if end user demand actually does take off, like their in-house analysts say. And again, a lot of us analysts who have been looking at this sort of stuff for a long time have a very hard time believing those demand numbers. I'm not sure where they're getting them from. Again, they're probably getting better information than I am, but it's just not obvious where that demand is actually going to come from and in what form. And again, the transportation fuel seems to be sort of flatlining, at least for now. So it's definitely a conundrum that OPEC has themselves in, and it could be very disruptive to the markets. Like I said, if they try to bring back production too fast, too much, they're going to give the price signal for U.S. shale to shut off production and maybe even start reducing production, right? So we'll have to see how that works out. It's going to be an interesting one, guys. Kind of a 1-2 here that the market's looking at, a combination punch that the global market has to figure out how to dodge the tariff fallout, and then how to dodge OPEC bringing production back. So hope you've enjoyed this video. Sorry, it's been kind of a long one here, but please like and subscribe, and go to theoilbalance.com for more information. We just produced our April View into the Future report. So again, dealing with one significant scenario, that's sort of the most likely tariff scenario that we think is going to happen, and sort of gaming that out and seeing what that does with balances. If you're in the market, you need to see this report. All right, so go to oilbalance.com, send me an email, and we'll get that out to you. All right, thank you.